The leverage of paper assets. As Rich Dad said, while there is risk, investing does not have to be risky. Nor do you have to lose if the market changes direction. In fact, if the market starts to go down, many sophisticated investors make a lot of money. The following are my Rich Dad's lessons on how to invest in the stock market and make money, whether the market is going up or down. One of the key things to do is to keep an open context. An open mind and a flexible context are important. Don't say that's impossible. Vocabulary of insurance. If you want to retire young and retire rich, it is important that you invest some time learning how to protect your assets, especially if you plan on holding your wealth in paper assets. You do that by learning and understanding what my Rich Dad called the language of a sophisticated investor. In my investment seminars, I call it the vocabulary of insurance. Before getting into these words, I believe it is important to review a few other words. Investor versus trader. If you want to be successful in the world of investing, whether it is in paper assets, businesses, or real estate, you need to be both an investor and a trader. An investor knows what to analyze and how to manage investments, and a trader knows how and when to buy and sell. An investor usually wants cash flow from the asset, and the trader wants to realize a capital gain from buying low and selling high. Fundamental investor versus technical investor. A fundamental investor looks at the financial statement of a company or property. A fundamental investor is often concerned with earnings, the management team, and the long-term potential of the business. The technical investor only cares about the market sentiment at the moment. A technical investor can be a good technical investor and lose money simply because they lack proper fundamentals. The same is true for fundamental investors, who can lose because they lack the knowledge of technical trading. This reality is why Rich Dad wanted his son and me to be qualified or sophisticated investors. Investors with both good fundamental skills and good technical skills. And finally, average investor versus sophisticated investor. The average investor barely knows what a financial statement is. The average investor is better off investing for the long term and investing in mutual funds. The sophisticated investor is someone who has money and understands both fundamental investment techniques as well as technical trading techniques. Words that help you win in any market. If you want to retire young and retire rich, protecting or insuring your assets from catastrophic loss is vital. The way to win and protect your assets in any market is to learn and truly understand the vocabulary of the fundamental and technical investor, especially in paper assets. It is easy to do if you will invest a little time. Just as a banker will ask to see your financial statement before giving you a loan and require you to have property, title, and mortgage insurance on a real estate investment to ensure the technical or catastrophic risk, you too should require the same of yourself if you want to invest in paper assets. The way you do that is to begin understanding the words of insurance when investing in paper assets.